Hello, this is Joe Pryor, the virtual real estate team in Oklahoma. And, the question I've been getting with these rates going up as much as they have over the last 4, 5, 6 months is, well, the cash flow is not what it used to be. When we were at 3.5% or 4.5% interest, covered a world of sins. In other words, everything was positive cash flow, even if you didn't make a good investment. Now, we want you to always make a good investment. We want to get the maximum for you. But with these rates going up, we are now getting down to, a little bit positive cash flow or possibly neutral cash flow. But I want to explain how that works for you. And I can show you this on a spreadsheet and explain it to you. You can't necessarily do this in the video. But, what's interesting about real estate is you get deductions. You have a 27.5-year depreciation schedule on the improvements. Take out the land. Say the land's $50,000 out of $300,000, the depreciation's on $250,000. We're able to depreciate that over 27.5 years. And so even if you're making money to the IRS, you may be losing $300 a month. That's $300 really positive to you. So even with lower cash flow, our positive cash flow after tax is even higher because it's lowering your basis for taxes. So that's number one. The second thing is choosing a market that appreciates. Now, everybody's worried. I have people going, oh my God, is the world coming to an end? I know we have a big war going on in Europe right now. It worries everybody. And we have inflation going on in the United States. We have probably, some areas are really automatically in a recession at this point. Not all markets are like that. The thing about Oklahoma that's always been fascinating to me, and when I started dealing with out-of-state and out-of-country investors in a large way in 2004, there was an article, I can't remember if it was the LA or the New York Times where it was, but it called Oklahoma City the most recession-proof city in the United States. And since the year 2000, we haven't had a downturn. In other words, we're now into our 22nd year of positive appreciation. Other markets have gone up a lot faster than we have, but they've also gone down a lot faster. An Atlanta, a Phoenix, a Boise, a Jacksonville. These are markets that got overheated. We don't get overheated in Oklahoma. We're the 4th most affordable city in the United States. And in October, when everybody was really worried, we were the 5th highest appreciation in the United States for metro areas over 1 million. Now, it wasn't as much as we normally are, but we've been figuring our appreciation normally at 5%. When I do when I do a spreadsheet, I'm using a more conservative number like 4%. But what happens is your wealth, as I've said in other videos, is being built by compound interest. So if we're going up 5%, that means for every 100,000, next year first year is worth 105,000. And in the second year, the 5% is figured on 105,000. So you're not losing any money, even if you're slightly negative, which we try to avoid, but even if you are, you still have positive cash flow with your tax deductions. Remember, your improvements and your repairs are also deductible along with the depreciation schedule. This is what's unique about real estate. This is what makes it different from any other investment. It's not like the stock market where I invested in a company that's building charging stations and I was a little premature and I'm now off 60%. It's going to take me a long time to get that money back if I don't just sell it at a loss. Real estate doesn't do that. So even with these lower cash flows, and again, rates are going down, which are helping us out, you can make a lot of money over the next 7 to 10 years with a conservative investment because everybody's got to live somewhere, owning or renting.